Welcome to Trading Lounge and the Commodity Futures Report for Friday, April 1st, starting with the US dollar index here. Wave 3 and A, B and C here for wave 4. Nice 5-wave structure to the downside here. So we should see that continuing to push to the upside while indices, meaning really the DAX and the Euro indices, pushing to the downside, taking the Euro USD down lower. So we'll see that push to the upside there. Alrighty, so over to the commodities. As such, the US spot gold, in a nutshell, we've been looking for wave 1 here, an A wave, a B wave over here, and 3 waves of an A and a B and a C, and then looking for 5 waves down for wave C of 2 here. So we've been counting down as 1, 2, 3, 4, and then little 1, 2, 3, 4, 5 down here for wave 1 here, and then looking back for wave 2. Now it has pulled a little bit higher than I expected it to, so it's pulled really up to the 78.6. So I've still labeled it as all from wave B here as wave 1 and wave 2 here, and then looking down for 3, 4 and 5. So looking down low, we want 5 waves to the downside. Now, is it possible that, as we've talked about before, is it possible that we could have this as the A wave, the B wave, and the C wave here for wave 2 and done and dusted? Because we are at the, in this box here, which is the 50 and the 61.8% retracement level. Well, I think it's a possibility. Do I know for sure? No, I don't. But it is possible. So we'll work with that. And one of the things that we were looking for was that I was looking for an A and a B and a C wave. So if I get the first high above here, because it also looks like from here, it looks like we need 1, 2 here, and then all the way for 3, 4 and 5. It looks like we want to push one more leg up here for that. So if that's the case, as you know, this is between the trading levels now, between 1900 and 2000 here, we've got the sub-levels here of 1, 2 and 3, 10, 20 and 30 that make up group 1, and we're getting support on group 1, which is a positive. And then there's the midpoint, and then there's group 2 here. So the midpoint, number 5, the 50, is the most important number between 1900 and 2000 here. So gaining support here would be critical for any upside. So what we'd want to see is the first high above the level, and then we can look to put our trade in above that if it's triggered at that point. It could don't jump the gun, because it could certainly just retest here and move on down. Now, in a nutshell, we're looking for a classic trading levels pattern at that point. So we'd be looking for a pattern like this at 1950. So we want that first high above the level. Yes, we can go to the second high and the third high here to be triggered in. That's not a problem. But we need that. So it's possible to have one more push up here and then fail at that point and move down. So in a nutshell, we had this down here under the 1920. Now we can pull it up to here. So if the 1930 becomes the retested resistance, well, then we can look to short that at that point there as well. Now, the other little thing that might occur here as well is that we may already have the top in play here, and this will be wave 1 to the downside, and then going back up for wave 2, 50-60% of the length of that swing here, and then move on down from that point. If that moves up there, then this green for the short trade can move up under there at that point, okay? But that's got to move in. But for the meantime, I'll just leave it below here for that. So it's a little bit, it's not, yeah, I mean, we'll see what plays out. Long trade, short trade, that's how that can play out. And silver's a bit the same as well. Now, there's lots of commodities that have this wave 1 ABC for 2 that we're going through, and crude oil is another one, but crude oil is actually rolling over, so it's maybe, you know, these will follow that move down there as well with crude oil. This is silver here, so we've got the same sort of situation here, a little degree smaller, but wave 1 here with with 1, 2, 3, 4, and 5 here, the extension in the fifth wave, which is quite common for commodities, and then an A and a B and a C for the B wave, and then down for the C wave here. Now, do I put this C wave in here? It's right on the 50-60% retracement level. So one of the things that we were looking for here as well is that we wanted to see if we get support on the 25, because otherwise we would need to look at this all as wave 1 to the downside and wave 2 to this point, and then copy this for wave 3, 4, and 5 here. So both are very valid, and you need to be very careful about what you do here in this instance. Once again, we would need to see a classic trading levels pattern here. So we want the first high above the level, not something small like this, but something, you know, a little bit significant, something a bit like this here. And then you can look to go long at that point if it's breached after retest the 25 at that point, because it would be above the 61.8%, which is holding quite nicely, and it's respecting it in lots of different ways. So look, maybe it climbs up there and moves on up. We know that this move here is in 5 waves, so an A wave, a B wave, and yeah, let's see. It's got to sit on there firmly, so you visually need to be able to see it as support sitting on there before we can go long. Iron ore's been on track for being bullish, with all the way down for wave C, with wave 1 here and 2 here, 1 and 2 and 1 and 2. So because we're in the third of the third here, the market should move along quite swiftly, which it is doing here quite nicely. Now 901 here, Chinese exchange, futures exchange for iron ore. You know, it's going to hold the market a little bit, as I've mentioned, and it's doing that. But at the same time, being in the third of the third, it's in quite a nice, strong sort of move here. So it shouldn't linger here too long. Once it's done its business here, it also should just push up nicely. I know the volume is getting low here, but we also know the CCP puts pressure on the traders to keep this commodity down. We've seen it happen over here as well, but they can't hold it down forever. Alrighty, so crude oil. So this is the same as gold and silver in a way. We've got the wave 1 up here, then 5 waves down for the A wave. The B wave here is an A and a B, and 1, 2, 3, 4, 5 for the C wave of B. And then we're looking for 1 and 2 here, and then 3 in blue, minute degree, and 4 and 5 moving down to $80 here. Now, in this instance, not like gold and silver, but in this instance, we can see this has rolled over here now. We've got a nice 5-wave structure down here. So from wave 2, we've got wave 1 here and wave 2 here. And then if we take a closer look in here, we can see that we've also got 1, 2, 3, 4, 5 here. So we'll probably get some sort of ABC pattern back up to here, and then wave 3 to move down through that. And based on that, we can look to go short through this little area through here. So that will be the retest of that. So anyway, you could find in a better way to go short if you wanted to get closer to the market, but I'll leave that there because I have to work in front of the market the time the video gets out, and so on and so on. But yeah, so you can improve that. But look, the main point here is that you know, it's testing the low here for this. And sure, it hasn't breached it yet, and if I was wrong, if I just grab that line here and put that there just to double check, so we haven't breached it. So it is possible we could get 5 waves out of this and look at this as an A and a B and a C and then move up, and I'm wrong at that point. But that's why we want to take that low out here, and that would, you know, that would certify that we're going down as 1 and 2 and 3 and 4 and 5 for wave 3, and then wave 4 and wave 5 for the third wave, and then wave 4. And then wave 5. So look, this is why I'm thinking gold and silver could probably do the same as well in all of this, you know. Anyway, that's where we're at for crude oil, and copper's the same as well, really. So in this case here, we don't have a beautiful 5 waves down in this here for this. So I could count it down as an A and a B and 1 and 2 and 3 and 4 and 5. But yes, wave 3 is a bit short. Wave 4 overlaps wave 1. So, you know, you can chuck tomatoes at me and stuff for doing all of that. So I've been a little bit unsure about this particular one. And then moving up here, I did have 5 waves of 1, 2, 3, 4 and 5 here. So I looked at it being wave 1 and 2 here. And we look to go long at this point here. Now that we've got this move up here and we pull back into here, I want to put the stop here because we could get stopped out. We've got half a position here. We've pretty much got it to break even here. If this top gets taken out here, we can be long again at that point or go long at that point. Otherwise, this is going to roll over at this point. I mean, we could probably also, now that I'm thinking about it, we could probably also look at all of that as the A wave, all of that as the B wave, and all of that as the C wave here, and then down for 1 here and back for 2. It would put us behind a little bit. Anyway, I'll give that some thought, but you could also short this below here as well if you were looking for that, or to hedge a position or something or other. So that shouldn't be breached because that move from the top to the bottom here is at the 61.8% within group 2 here. If you do go short and the 65 here, the 46,050 here on a CFD platform, if that becomes the retested resistance, you can also add to the short at that point, trade it down to the 45, get out or take most of it off the table there for the bounce, and then we'll end up just going through that a little bit, probably down to the 43. Always get a strong bounce off the 43 at that point. So next one is nickel, because the LME was pretty much manipulated by, LME is owned by the Chinese, and the Chinese have had all those $8 billion short positions in there, keeping the nickel price down, yada, yada, yada. So anyway, I've had to start again with this little particular pattern here, and I don't have an impulse wave off this low here. I have 3 waves, so it certainly can be corrective with 1 and 2 and 3 down to here, 4 down to here, and then 5 down to here. If it is going to pop, well, then we'll take half a position or a third of a position above that, above the 33 there, and we'll run with that, and then we'll put the stop under here if that gets triggered, and we'll try to work it to the upside. But otherwise, we'll see it down. The stochastics are suggesting that it can pop. We'll see how that goes. Not a lot of pattern to work on here, but we'll just keep poking it with the stick and see how we go. Now, uranium, the thing I like about uranium at this point is that on the $25 mark here, you can see that the market, you know, it's been trying to, well, it's basically been, you know, it's got these higher lows here and higher highs. It's basically been, what I've been looking for is really key to see if we can get this as the support. Now it's really looking like that, isn't it? We've got a little position in here. You can keep the stop under this level, under the 25 here now for that. And then we've got half or a quarter of a position, third, quarter, half, whatever you want to do. And then here we'll do a full position if we get breached at that point, because that is the 61.8% at that point. So if, and it's a bit of a big if, we don't have a really nice pattern here, but if that gets breached, then we'll be on that. And we're going long because we're above this number. You know, if this was upside down and we're below this number, we'll be looking for short trades, but that's not the case. Japan is the biggest purchaser of uranium, so yeah, but there is energy crisis around the world, so who knows, Germany could open up their 3 power plants as well. We'll see how it all goes. Rightio, next is natural gas. So with natural gas here, yes, so we can look at it wave 1 here and wave 2 here, then wave 1 here, wave 2 here, then wave 1, 2, and 1 and 2. And we are pushing off quite nicely for a third of the third of the third of the third here, I have to say. So we'll just continue to see how this pushes off. The alternative count, as you may know, has intermediate wave 4 sitting here for this. So I'll just plonk that there, and I'll just put it in grey so we know what we're doing. So I mean, it's just a shame that it hasn't come back and tested this number here. So that bothers me a little bit, I must say. But the more it pushes up, obviously, the less worried I'll be about that. It does have a nice support on top of 30, so that's a bit sort of satisfying. We do have 1, 2, 3, 4, 5 for the third wave here, so I'm counting 1 and 2. A little bit unsure about this situation, but 1 and 2, 1, 2, 3, 4, 5. This last move in here, it's going to be, we're in sort of 3s and 4s now, so it does appear that we've got 1 here and 2 here, nice strong third wave and fourth wave, but the fourth wave is overlapping a little bit, so we'll see if that pushes up there anyway, and if that's the case, it's only going to come back down again as well. So yeah, anyway, that's sort of where we are. It looks like it wants to sort of push up there in due course, so yeah, let's just see how that goes. So that's all going quite well, and if that is the case, well, then we'll look to add over here, or maybe even back here further, or on top here. So we'll work that as we go with it. Gas stocks are looking good as well. So the other thing that I wanted to look at last week, and I haven't got it set up because it's not on this platform. I have to put it on my own charting program, which is an ETF. I've looked at some of the ETFs, and the best pattern that I can see, or the best one to be in, would be UNL. Alrighty, so we'll have a look at that along the way. Alrighty, that's it. Thanks for tuning in, and enjoy the weekend. Cheers.